The stock market can be intimidating. It's like a roaring lion, teeth bared, ready to pounce. But don't let that scare you. This beast can be tamed. It can even be your friend. The stock market is where companies go to raise money. They sell small pieces of themselves called stocks. You buy these stocks. You become a part owner. Think of it like buying a slice of your favorite pizza place. That's the stock market in a nutshell. You don't need to be a Wall Street hotshot to invest. You can start small, right from your couch. Even a small amount invested wisely can grow over time. Think of it like planting a seed. Slowly, it grows and bears fruit. Investing is similar. Start small, stay consistent, and let time work its magic. So are you ready to embark on this journey? Let's dive in. Let's talk stocks. Remember those slices of the pizza place? Those are stocks. When you buy stock in a company, you're buying a tiny piece of that company. You become a shareholder. You're part owner. Now, stocks aren't just pieces of paper. They represent real value. As the company grows and becomes more profitable, your stock value increases. That's how you make money in the stock market. But remember, just like any business, there are risks. If the company doesn't perform well, your stock value could decrease. It's a two-way street. That's why research is key. You gotta know what you're buying. Look at the company's track record, their products, their management team. Do your homework. Investing in stocks is like anything else in life. The more knowledge you have, the better decisions you make. Remember, we're in this for the long haul. Now let's talk options. Options trading is like using a turbocharger on your investments. It's not for the faint of heart. It's for the thrill seekers. Options give you the right, but not the obligation, to buy or sell a stock at a specific price. Think of it like betting on a horse race. You're betting on whether a stock's price will go up or down. If you're right, you can make a killing. But if you're wrong, you could lose big. Options involve leverage. It's like having a megaphone for your money. A small amount of capital can control a much larger position in a stock. They require research and understanding. Before you jump into options, grasp the stock market basics. Remember, options are a tool. Bonds, lending a helping hand. Bonds are like loans. You're lending money to a company or government. They promise to pay you back with interest. Bonds are generally less risky than stocks. They offer a steady stream of income. Think of bonds as the tortoise in the race against the hare. Mutual funds, diversifying your portfolio. Now, let's talk about mutual funds. Mutual funds are like baskets of stocks or bonds. They allow you to invest in a diversified portfolio of assets with a single investment. Think of it like a buffet. Instead of picking just one dish, you get a taste of everything. This diversification helps spread your risk. Mutual funds are managed by professionals. These fund managers do the research, pick the stocks or bonds, and manage the portfolio for you. It's a great option for investors who don't have the time or expertise to manage their own investments. There are thousands of mutual funds available, each with its own investment objective. Some funds focus on growth, others on income, and some on specific sectors like technology or healthcare. Choosing the right mutual fund depends on your investment goals, risk tolerance, and time horizon. Risk versus reward balancing act. Listen up, in the stock market, there's a dance between risk and reward. They're partners, inseparable. Higher risk, potential for higher reward. Lower risk, you guessed it, potentially lower reward. It's about finding your comfort zone, your sweet spot. Think of it like climbing a mountain. The higher you climb, the better the view, the greater the thrill, but also the greater the risk. You could stumble, you could slip. Same with investing. High growth stocks, they're like that mountain climb. Exciting but risky. Bonds, they're like a stroll in the park. Safe, predictable, but maybe not as exhilarating. Your risk tolerance, it's personal. It depends on your age, your financial goals, your sleep-at-night comfort level. Diversification. Don't put all your eggs in one basket. Remember that old saying? Don't put all your eggs in one basket. It's true for life, and it's definitely true for investing. Diversification. That's the key. It's about spreading your money across different asset classes. Stocks, bonds, maybe even real estate. Think of it like this. You wouldn't bet your entire life savings on one horse race, would you? Of course not. You'd spread your bets, increase your chances of winning. Same with investing. Diversify across different sectors, technology, healthcare, energy. Diversify across different geographies, US, international, emerging markets. Why? Because when one area zigzags, another might zag. It's about cushioning your portfolio, protecting yourself from big losses. Understanding market cycles, riding the waves. The stock market, it's like the ocean. It has tides, it has waves. Ups and downs, booms and busts. It's called market cycles. Understanding these cycles, it's like reading the waves before you surf. Bull market, that's when the market is charging ahead, prices are rising, everyone's optimistic. Bear market, it's the opposite. Prices are falling, pessimism reigns. It's natural, it's part of the cycle. The key? Don't panic. Don't make rash decisions based on fear or greed. Stick to your long-term strategy. Remember, time in the market is better than timing the market. Long-term vision. Patience is key. Investing, it's not a sprint, folks, it's a marathon. It's about patience. It's about discipline. It's about letting your money grow over time, like a tree planting its roots deep into the ground. Don't get distracted by the noise, by the daily ups and downs. Focus on the long term. Focus on your goals. Retirement, buying a house, your kids' education. Remember, the stock market, it's not a casino. It's not about getting rich quick. It's about building wealth over time, brick by brick, stock by stock. It's about taking control of your financial future. All right, want to start investing? First things first, you gotta find your investing dough. That means creating a budget. Don't worry, it's not as scary as it sounds. It's about taking control of your money, seeing where it goes each month. Think of your budget as a money map. It shows you where you are and helps you chart a course to where you want to go. Financial freedom. Start by tracking your income and expenses. Where does your money come from? Where does it go? Be honest with yourself. Those daily coffees add up. Once you have a clear picture, you can start looking for areas to cut back. Remember, every dollar you save is a dollar you can invest, a dollar that can grow and work for you. Even small amounts invested consistently can make a big difference over time. Now that you've got your budget sorted, it's time to choose your investing platform. This is your command center, your gateway to the stock market. There are tons of options out there, from traditional brokerage firms to online platforms. Each has its own strengths and weaknesses. Look for a platform that's user-friendly, especially if you're a beginner. Make sure it offers the investment options you're interested in, whether it's stocks, bonds, or mutual funds. Fees are important too. Compare commissions, account minimums, and other costs. Some platforms offer educational resources, research tools, and even robo-advisors that can help you build and manage your portfolio. Remember, choose a platform you feel comfortable with, one that meets your specific needs and investment goals. Time to talk taxes. Don't worry, it's not as painful as a root canal. When it comes to investing, there are special accounts that can help you save on taxes. One popular option is a 401k or 403(b) account. These are retirement accounts offered through your employer. The beauty of these accounts is that your contributions are tax deferred. That means you don't pay taxes on that money until you withdraw it in retirement. Another great option is an individual retirement account, or IRA. There are two main types: traditional IRAs and Roth IRAs. Each has its own tax advantages, so it's important to understand the difference. Talk to a financial advisor to see which type of account is right for you. Remember, tax-advantaged accounts can help you keep more of your hard-earned money, so you can invest more and reach your financial goals faster. Starting small, thinking big first investment steps. Ready to make your first investment? You don't need a fortune to start. Small amounts add up over time. The key is to start somewhere. Consider a low-cost index fund. It tracks a market index like the S&P 500. Diversify your portfolio or invest in fractional shares. Buy fractions of individual stocks. Invest in companies like Apple or Amazon. Your first investment doesn't have to be perfect. Take that first step and build confidence. Research and due diligence. Know your investments. Before you hit that buy button, remember the golden rule of investing. Do your research. Don't invest in something you don't understand. Take the time to learn about the companies you're considering. Read their financial statements, understand their business model, and look at their track record. There are tons of resources available online, from financial news websites to company investor relations pages. Pay attention to key metrics like earnings per share, price-to-earnings ratio, and debt-to-equity ratio. These numbers can give you insights into a company's financial health and growth potential. Remember, investing is not gambling. It's about making informed decisions based on research and analysis. The more you know, the better equipped you'll be to make smart investment choices. Emotions and investing, don't let fear and greed drive. Listen up, the stock market, it's a roller coaster. Ups and downs, twists and turns, it's enough to make your stomach churn. But remember, you gotta keep your emotions in check. Fear and greed, they're the two biggest enemies of successful investing. Fear makes you sell low, panic selling when the market dips. Greed makes you buy high, chasing the latest hot stock. Don't get caught in the emotional trap. Stick to your plan. Remember your investment goals, your risk tolerance. Take a deep breath, think rationally. The market will fluctuate, it's inevitable. But over the long term, it has always trended upward. Ride the waves, don't let them drown you. Staying informed, keep your finger on the pulse. In the stock market, knowledge is power. You gotta stay informed, keep your finger on the pulse of the market. Read financial news, follow market trends, understand what's driving stock prices. Subscribe to reputable financial publications. Listen to podcasts, watch financial news channels. But be selective. There's a lot of noise out there, a lot of hype. Look for balanced reporting, objective analysis. Don't buy into every hot tip or get-rich-quick scheme. Remember, knowledge is your best defense against making impulsive investment decisions. The more you know, the better equipped you'll be to navigate the market's ups and downs. Learning from mistakes, turning setbacks into comebacks. Listen, everyone makes mistakes, especially in the stock market, even the pros. The key is to learn from those mistakes, turn setbacks into comebacks. Don't beat yourself up over a bad trade or a missed opportunity. Analyze what went wrong. Did you let your emotions get the best of you? Did you fail to do your research? Learn from your mistakes, adjust your strategy, and move on. Remember, investing is a journey, not a destination. There will be bumps along the way, but it's how you respond to those bumps that determines your long-term success. Seeking advice. Don't be afraid to ask for help. Feeling lost or overwhelmed? Hey, it's okay to ask for help. Talk to a financial advisor, a trusted friend, or a family member who's knowledgeable about investing. A good financial advisor can help you create a personalized investment plan, choose the right investments, and navigate the complexities of the market. They can provide objective advice, tailored to your specific financial goals and risk tolerance. Remember, you don't have to go it alone. Seeking guidance from experienced professionals can make all the difference in your investment journey. The power of investing, taking control of your financial future. We've covered a lot of ground, haven't we? From the basics of the stock market to different investment options, from managing risk to staying informed. Remember that roaring lion we talked about? He's looking a lot less scary now, isn't he? That's the power of knowledge, the power of understanding. The stock market, it's not some exclusive club reserved for the wealthy. It's open to everyone. It's a tool, a powerful tool that can help you achieve your financial dreams. Whether it's retiring early, buying your dream home, or securing your children's future, investing can help you get there. It's about taking control of your finances, building wealth over time, and securing your financial freedom. Start today, no matter where you are. Your journey begins now. The best time to plant a tree was 20 years ago. The second best time is today. The same goes for investing. Don't wait for the perfect time or until you have a big chunk of money saved. Start today, no matter where you are. Every journey begins with a single step. Open that investing account, make that first deposit, even if it's just a small amount. Remember, consistency is key. Just like you wouldn't expect to run a marathon without training, don't expect to become a successful investor overnight. It takes time, it takes effort, and it takes a willingness to learn and adapt. But the rewards, believe me, are worth it. So, Are you ready to embark on this exciting journey? The stock market awaits. And before you go to start your journey, take a minute to like, share, and subscribe to this channel. Thanks for watching.